Good afternoon. This is Chris Brecher with a Simpler Stocks free video for May 19th, 2016. So you see it's about 45 minutes after before the bell, about an hour after the Fed minutes. Basically, the Fed came out and said they might raise in June, about 7 days before the Brexit vote. That if the data comes in and stays strong, they're gonna raise rates. So what that did is it just put the kibosh on the market. Earlier today was up like this. But let me just tell you what we've been talking all the time in the market. Number one, the Fed. Yesterday, a lot of Fed governors warned that they might raise rates. So what happens though? Everybody tries to anticipate what the market's doing instead of waiting. And so what I mean by that is, here's the 78. We know it worked it off the oversold overnight. Everybody wanted to short on the opening. They all got caught short. That's all this is about. Then the Fed came out and said they're going to raise, and guess what? Market went straight back down, and what's it doing now? It's trying to form a little bear flag and working off this oversold. That's all it's doing right now. Now, I know it's 45 minutes before the bell, and I might be overstepping some stuff, but it looks to me like we're going to stay in this area right here. Now, don't forget, a lot of bears got hurt today. If we break down this time, the problem is, the more times that you stop at a place, the more significant when it breaks it, because you have all the bears here getting hurt all these times in here. They finally give up. So now you finally don't have too many shorts and you can go down. That's at least the theoretical part of it. Other thing is, and we talked about this morning, actually on the chat, that it was real likely the Fed was going to tighten. They're watching the Brexit. That's, about Britain leaving the EU. The whole idea is a poll came out today, and the people opposing a Brexit are 18 percentage points higher. The second I saw that, I knew the Fed was probably going to want to tighten, because they weren't going to tighten if there was some worldwide instability, and now you're not going to have that. So I had a feeling the language would be like this, and that's what happened. Now, what do you do now? Number one, you got to watch gold. Tightening, bad for gold, good for dollar. So what do I mean by that? Always look at this on the left here. Here's the dollar index. I'll unlink it. You can see it even on a 78 minute, how dramatic. Now put gold on the right. And check that out. If you don't think they have a relationship together, well, you're wrong. They obviously have a big old relationship. So that's something to definitely keep in mind. Dollar going up. Now, long term, I'm not a perfect at gauging the dollar. All I want to tell you is we stopped at support. And that's about all I can tell you I'm no expert whatsoever. Also, I pointed this out today in the live chat, this bull wedge. Now, that doesn't mean we're going straight up, but it means you could have a move into the 96, 97 area, which would really quash gold. So I didn't go near gold. It's not like I was pounding the table on it. We don't do that on Simpler Stocks. We usually talk just more about gold, about stocks, and that's it. Second thing you got to watch in here is crude oil. Now, the whole idea is if you don't trade crude oil, you can always trade the crude oil stocks. We were showing this stock this morning. So here's crude oil. So obviously, if the Fed tightens, that's bad for every commodity. So obviously, oil sold off. The key in here is what went down prior to oil selling off. PXD has been having things in the news saying that their accounting is sort of funky. So you're talking about oil on the left going to new high and PXD on the right not being able to get out of its own way. Even today, notice this with oil this morning. Look at the oil this morning when oil was going up. And then look at PXD was going down. The whole theory is if oil sells off, then this is going to be the leader, and that's exactly what happened. Those are the type of things that we teach at Simpler Stocks, is to watch correlations. You don't have to be a futures trader, but you need to know what influences an individual stock. And as you can see on here, oil, the weakness already in PXD, then got exacerbated by the sell-off in oil. Just wanted to show you how that works. What do we do now? Telling you, we're right in this crux here where tomorrow is going to be the big day. Now, I know I said that yesterday and the day before, but it sounds like some of them needs to paint the house and they keep putting it off by a day. The whole idea is this. Nobody wants to be short the market overnight, because every time they do that, they get burned. That's what makes me think this time it's going to work. If it doesn't hold here and then breaks here, we could have the futures open way down tomorrow morning. So, obviously nobody wants that. They all want the market open up so they can short it. So you never get what everybody wants. What do I think? I'm not sure. If I miss the initial breakdown, I'm going to wait for the next leg and decide how to short it from there. If the market does miraculously hold up here, then I'll look for some longs. What are some longs? Right now, believe it or not, I don't have a lot. I can't show you a lot of things that actually look good. I tried to build a table of 15-minute bear flags. I tried to do a ledge trades, and I tried to do things that were bullish. The problem with a lot of the bullish charts, if you go to net change, they just don't have the oomph you'd expect. Maybe ANIP I was showing as a small biotech that has a pretty good looking chart. But besides that, if the overall market breaks, you want to look for short stocks, not long. So just understand both sides to the equation. So just so you know, we still have the $7 30-day trial. Just to let you know what that includes, because I'm really proud of this, just so you know. I show this all the time of what I post in here. On our homepage, you have 6 different tiles. You have chat room, premium videos, email alerts, the forum where we exchange ideas just on a forum, a print page, so to speak, a meetup where almost every week I go over some other sector of the market, and then they're posted in the Learning Center. All of this is for free. It's all included your subscription. But what I'm excited about is like the email alerts. I send out charts every night of the indexes, some stock trades and chart ideas, and this unusual options activity has become a huge hit. So I know there are other services that charge like $400 a month that just pump out all these different unusual options. Most of that you can just get on a scan and think or swim. But the key is you need to go through them with the experience of someone like me that knows which ones seem to be significant, which ones aren't. To give you an idea in here, let me just show you. This is pretty neat. Yesterday, big spread in Lowe's. Now, what's cool about Lowe's is we were showing this spread in here. And we were showing that there was a big old put spread being bought and calls being sold. Every time we've seen this in other stocks similar, guess what's happened? The stocks have gone up, not down. And I said, be careful being short. Don't think it's going to follow Home Depot. And guess what? Lowe's today is up 2 points. Home Depot is down another 61 cents. So that spread is even widened even more. Second thing in here is what we showed today before it went down. I pointed out something called a back spread in EMR where somebody buys twice as many puts as they sell calls. It could be twice as many puts than they sell puts. And it could be calls also. But a back spread is betting on a big move. Now what I want to show you is EMR. When I posted this, EMR was right here. Right in this area. It's already sold off another 80 cents. Basically, somebody's betting on a big old move in there. So that's the thing you get on simpler stocks. We don't give specific trades, we give ideas. We also go over how to learn how to find them on your own and trying to find higher probability chart patterns. So I hope you take us up on that offer. A lot of people, thousands of people have. And I will talk to you tomorrow. Have a great night.